In this video, we're going to review the HL30 trading technique. Now, I've referred to the HL30 trading technique as one of the easiest trading systems or trading strategies that I teach. From every student that I've ever taught it to, they all say that it's one of the easiest trading strategies. And right away, anybody that looks at my ebooks or my video courses, they go straight for the HL30 just because it's so simple. It doesn't mean that because it's so simple that it's it shouldn't be taken seriously. It's definitely a trading system or a trading strategy that you should really consider. What we're looking at right now, first of all, is the pound dollar, and this is a 30-minute time frame, and we're looking at specifically February 21st. So this video is about when not to take the HL30. So basically with the HL30, what you're doing is you're looking for the previous day's high and low. It's just as simple as that, and I'm using the CCI indicator on the 30-minute time frame set at 14. I do throw in pivot points, so I'm looking at the fulcrum. I would prefer to see that if I'm going to go long, I'd like to see that price is above the fulcrum point, but you don't really have to use it. I'm much more comfortable with it. It's sort of an additional confirmation zone for me. But let's go ahead and set this chart up, and let's take a look at the February 21st, 2013 on the pound dollar 30-minute time frame. Here we have the day's low and the day's high marked off with these two red lines. And we're going to go step by step until we can identify the HL30 pattern, that particular candle pattern that gives me an entry or a signal. Now, I also refer to the high and the low, or when price on the new current day that you're trading it, when it approaches either the high or the low, it needs to move within a 10 pip range. Briefly, that means that if the high, in this instance, the previous day's high, was 1.5272, let's get an accurate reading in here. 1.5272 was the high. So that means price, wherever it closes on that day, at that 5 p.m. rollover period, that's what I use as the cutoff, 5 p.m. Eastern time. Price needs to move up towards that high within 10 pips to qualify, and then I need to see that reversal candle pattern to trade it back down. And if price moves above the high, it can go no further than 10 pips in order for it to still remain a qualified signal. If it goes beyond 10 pips, then I won't trade it even if it gives me a signal. It's less reliable. Doesn't mean it won't work, it's just less reliable. And it has to move up and approach the high within 10 pips. And then the same thing just in the opposite direction with if we were trading it off of support. So in this case, we're looking at resistance. Price closed pretty close to resistance, and we're looking for an HL30. So we can see that price moved up here on this candle to a high of 59 or 60. So we need it to reach 62 if the high was 72 of the previous day in order for it to qualify. Now the high of that red candle there went to 62. 61.9 on this particular MetaTrader broker, 62. And then you get this reversal candle pattern right here. This is the reversal candle pattern. Now I have specific detailed instructions as to what qualifies for a specific signal candle in my trading course, in the ebook, which is the Learn Forex Trading in 30 Days ebook and video course. I have videos that will walk you through this, exactly how to do the setup. I even have templates for this particular strategy, this HL30 strategy, so you can set it up with everything, including the pivot points on all of the currencies that you want to trade. What we're looking for now is a reversal signal candle, and we need for that candle to close. We can't anticipate, we can't guess, we can't get in before it closes. It has to close. Remember, I'm applying this strategy on a 30-minute time frame. Now I'm looking at the CCI indicator once that candle closes, but prior to it closing, I can pretty much tell that we're going to get a bearish candle and possibly a signal candle a few minutes before. So I'm already measuring the high of the previous day and trying to identify where the signal candle is. So I want to measure the high of the previous day's high, the actual high in price, and then measure the CCI. And then on that reversal signal candle, I want to measure on the close of that signal candle the CCI to make sure that in this case, if I'm going to trade it back down, that the CCI reading is lower than the spike high in price and the CCI reading that correlates to that spike high in price. The CCI reading has to be lower on the signal candle. Once those two conditions occur, so we get the signal candle and we get the CCI reading that's lower than the previous day's high. So once everything lines up and confirms, on the pound dollar, I'm using a 20 pip target and a 20 pip stop. It's just that simple. The same thing with the euro dollar. The euro dollar, 20 pip target, 20 pip stop. I use the same 20 pip target, 20 pip stop for the dollar Canadian and the Australian dollar. Now for the pound yen and the euro yen, those are different targets. I use a 40 pip target and a 40 pip stop for both of those because they can move much further. Now, I do recommend trading this strategy with at least 2 lots so that you can scale out, because if the trend does continue, it just might pay you another 20 more pips. So you set it at a break-even stop after you reach the first target. Now, I did not take this particular trade and this pattern right here, this HL30. And I shared my thoughts and my opinions on it last week, but I keep getting more emails as to why I stayed away from it, because it's really important when not to take a particular trading strategy, when to know to stay away from it, when not to use it. Why didn't I take it is what I keep getting these emails. Why? What was it that I was looking at? Well, as I mentioned earlier, one of the things that I was looking at was that on the larger time frames, the daily and the 4-hour, for weeks, I've had a price target, an extension price target based on certain price swings. I've got some videos that will explain how I did that on my blog. Price on the pound dollar had reached those extreme levels. Price had reached those extension targets. Now again, that's not to say that price can't go any lower, but what I was anticipating is that for the most part, I was pretty much done trading or looking for more selling opportunities that were going to result in big moves. I had determined at that point that it looked exhausted, at least from the way I interpreted that information. To somebody else, it might not have made any sense, but to me, it's consistent. Looking for those Fibonacci extension targets based on the retracements on certain key highs and lows and turning points in the market using the 4-hour and the daily chart. And that's one of the reasons I was anticipating a possible bounce. But on this particular day, looking at the economic calendar and anticipating what some of that, the release and the data, the outcome of that economic data, I felt that we were going to get positive UK data. And that's in fact exactly what happened. So I stayed away from selling this. So that's what I used as my analysis to interpret that information. Now, that's not a common way to really look at this. Usually when you see the HL30, you just take it. And most of my students will take it no matter how many times it sets up. And yet still at the end of the week, they're still more than 80% profitable. I've had some students that will pick up this particular HL30 strategy as soon as they start working with me, and they'll use that strategy. And in the first week, I had one student take 26 trades, and I believe 22 of them worked and 4 of them failed. And he was just blown away by the possibilities. And he has consistently mastered and consistently traded the HL30. He doesn't like to trade breakout trades. He just likes to trade the HL30. And he's comfortable with the idea that the HL30 sometimes will experience losses a lot more than some of the other strategies that I use, like the continuation breakout trade. That one's much more reliable. But the HL30 isn't a perfect trading strategy, but it does produce great results, super affordable stop loss when you're looking at a 20 pip stop and a 20 pip target. It's really easy. You just repeat the pattern. As I said, I had a student that did it 26 trades in 1 week, and 22 of them were winning trades and 4 of them were losing trades. And you can use this same strategy on any currency pair. So I stayed away from this one because of the unique quality at this particular time. For example, I prefer to trade the HL30 in the direction of the trend. Well, this would have been in the direction of the trend. The trend in the pound dollar was down. So here I get a signal to sell it, yet I didn't sell it. Well, again, it was because I was looking at that information on the larger time frames that we were really at extreme levels, not just because it looked like it, but because I had certain key levels, technical levels, that were telling me, be very careful here. Be very careful because we are at extreme levels. I'm seeing some divergence in the indicators, and there's a possibility of a sharp bounce back up. And then economic data would help drive that. So let's go out a little bit further, and you'll see exactly what happened and how this trade completely reversed. This was economic data. So I would have been stopped out if I would have tried to sell that pair off of that HL30. That was my reasoning. Now, I might have been wrong, and this could have worked. But the fact that I had that doubt, I've learned as a trader that if there's any doubt, stay away from it. And there's no reason for me to let my ego get involved or for me to say, oh God, I've got to have a minimum of 40 or 60 pips every single day or I'm failing. I don't trade like that. I don't recommend using goals like that. They're self-destructive and they force you to put on trades that don't work. And and to put on trades with information that you're not really stable and you're not really comfortable with. If I'm in doubt, I will stay out and I'll just watch. And if it works, I'll pay attention and I'll try to identify why it worked. But if there's any doubt, I stay away. So I stayed away because I had doubts. I had doubts based on economic data that was available just shortly after that signal developed, and also those extreme technicals that I had on the larger time frames, the 4 hour and the daily. Thanks for watching.